So I'd started to realize we were devaluing the denominator. So for people to get their heads around this, if you look at the chart of the Venezuelan stock market, it goes like this, exponentially up. Turn it into dollars as opposed to Bolivar, and it goes straight down. And that's because the denominator has collapsed. So if that was the case, then I went back and looked at this, and it kind of made sense of all the asset prices and where they were. And so therefore, maybe the equities weren't in a bubble. Maybe we were just trading in this big sideways range where most of these old economy companies, things like G and stuff, aren't really going anywhere. They're kind of zombies, even though they're still huge companies. So I thought, okay, well, what has beaten this central bank balance sheet? Because the balance sheet of the Fed and all the others, the big central banks, have been growing at 15% a year. And there was only two things in the world that have beaten it. So if the value of your money in terms of what you can buy in assets is going down, what you really want to buy is an asset that outperforms the balance sheet, outperforms that. And there's only two. One was obviously Bitcoin and the whole crypto complex, massively, ludicrously outperforms. And the other were tech stocks. So the NASDAQ had outperformed since the bottom of 2000 since the bottom of about 2008, it had outperformed by about 350%, which none of the other assets had done. So I thought, well, what have Bitcoin and tech stocks got in common? And in my work on Bitcoin and understanding how to value cryptocurrencies, I realized that how you value them is Metcalfe's law, which is network adoption. The number of people who join the network and the number of connections they have with each other is the value of the network. And we can understand that from Facebook, mobile phone networks, Google, all of these things. And that was true of Bitcoin, and it was a network of money. So it was going to be worth a lot of money. But then I started looking at these Silicon Valley businesses that were driving the performance, Facebook, Google, Amazon, Apple, and I realized they had the same business model. These were all network businesses. So they always looked expensive to a macro investor. Because if we go wind back to, let's say, 2007, 6, Amazon was trading on a PE of 700. And people would say, well, this is crazy. They're worth more than all the booksellers in the world added together. In fact, they're worth more than every book ever printed. This doesn't make any sense. Well, the reason being is they weren't a book company. What they were was a retail network, and the biggest the world had ever seen. So those kind of assets tend to be exponential in price because that's how networks work. You have to actually look at them on log charts to make sense, because if not, everything always looks like a bubble and you miss it all. You're like, I can't buy this. It's gone up like this. It's because we don't understand what kind of business it is. So these are called exponential businesses. And what we're going into a period, and Bitcoin is one of those assets, but we're actually going to a period where we're about to see the largest adoption of technology in all recorded history, probably in a 10-year period. Already, Bitcoin is the fastest adoption of any technology in history. So the internet grew at 63% of a year at its first 10 years. Bitcoin's been growing at 113% a year. It's double the speed of the internet. We've never seen anything like it. Hence why the price always looks like it's in a bubble. But we've also got, we're just rolling out EVs, green energy, distributed computing, AI, robotics, genetic sciences. There's a whole bunch of things all happening at exactly the same time. It's kind of terrifying for us because we're going to have to go through a period of change that is kind of warp factor 10. But as opposed to fearing change, which many people do, they turn back and look for the politics of nostalgia, something they can grab hold, they understand, like, gold, that's my answer. But if you embrace the technology, you realize that things with exponential upsides are incredibly rewarding to invest in. And so as a macro guy, my job is to look at risk reward. So the risk reward for me was make a bit of money in a bull market and make 100% return in a bear market. And that was, good use of options, understanding how bond markets work. We don't have bond markets left anymore that trade, really. Foreign exchange markets, I think, are in range-bound markets and will be for maybe another decade. So we don't have the big macro variables. So therefore, and we've now got the central banks that anytime there's downside will print more money. And we know what that does to asset prices. So we've turned the whole skew of the opportunity to buying calls and not buying puts. And the exponential age means that the upside is unlimited. And that is what's so interesting about this period of time. So that's my new macro framework, which is weird for me to be talking about the upside in Google and Amazon and, Cathie Wood's ARK Invest and Bitcoin and being a wild-eyed optimist about technology, as opposed to the pessimist looking for the next dark cloud. But actually, from a macro risk reward perspective, this makes total sense.
It's super interesting. There's so much to unpack in there. Could you touch on a little bit, as you talk about this, you tend to, you pick on a few things. One of them is a lot of the ideas around Bitcoin is this inflation protection. But you also mentioned that inflation the dollar's not going away. So it seems to me that you're suggesting that the pace of adoption is going to outpace the pace of inflation. So we can't print as fast as the exponential growth in the technology. Is that that's
exactly it? Because the adoption of the new technology, think of Bitcoin and the crypto world as a new parallel financial system that we've discovered and built. And we're migrating there faster than any of the bad things that are happening. So what's happening is that network adoption of that migration of everybody going, wow, this is incredible, is massively offsetting any amount of monetary printing. They couldn't print it fast enough to offset it. So for example, Bitcoin has been growing. Bitcoin as an asset has performed 213% a year compounded for, since inception. It's no asset in history has ever done it. It's 100 million% it's gone up since it first printed.
Yeah, it's amazing. So I think you're saying it doesn't matter as long as you're on the assets that are outperforming. Is that correct?
That's right. So why do you need the outperformance? The reason being is you're not getting wealthy in real terms. So even though the S&P might be going up, if it's not outperforming the devaluation of the currency, you're actually net not building wealth. And that's, many of us have felt the same way. You bought a house, you've done this, and you kind of feel like you're going nowhere. Why is that? And that's puzzled so many people. And it's because actually your money is falling in value faster. So once you start being able to own these assets that outperform that, you then start building real wealth. And that's interesting.
Yeah, so this is kind of like, I think Michael Saylor talks about this as that melting ice cube. So even in real equity terms, you're potentially just sitting on a melting or stable ice cube at that point in time.
Exactly right. If you're, in a broad equity market, you're just staying neutral. So the ice cube's melting, but it kind of refreezes overnight.
Interesting. And you touched on a variety of these different industries that you're interested in or kind of paying attention to. Can we unpack a little bit? You mentioned automobiles, and you've had some interesting discussions around automobiles and the need to replace globally. Can you maybe dive into an example of whether it's automobiles or metaverse of how this might actually unfold?
The car one's a really interesting one. So I had written an article for Global Macro Investor and also for Real Vision Pro subscribers about carbon credits in Europe. And there's a futures contract, so EU ETS futures. And how interesting it was, because this massive fiscal stimulus that's coming out of Europe is driving towards a green revolution. So they're incentivizing people, but they're also penalizing people via this carbon cap, essentially, that they have to pay for, cap and trade. So I'd started investing in that and realized it was kind of exponential in nature, because everybody was being forced to do it. It's forcing the price of carbon up, etc. And while I was writing that, I was looking out the window in Grand Cayman and looked at the cars, and I'm like, oh my God, every car here is going to be obsolete within 10 years. Because the EU has basically said they're going to get to 65 or 70% of every car sold will be an EV by 2030. Right? 2030 is not that far away. So if you think of rates of change, we're about to go through it. So I'm like, So if everybody around the world is about to change their car, and we were going through a cycle of holding onto our cars longer and longer, because people were generally net poorer.
Right.
And so, because real wages hadn't gone up, so people weren't changing the cars. But now we've got this mass government incentive to do so. I thought, okay, that's interesting. But we knew that kind of Tesla was the only car company doing it. I'll come on to Tesla in a sec, because there's a broader conversation about this. So then I started looking at the price of VW, and they're like a rocket ship going up. I'm like, oh yeah, this is exactly what's going on.